What a nauseating cluster F. In today's bankruptcy filing, the new CEO of FTX called the culture and the internal control environment of FTX to be the worst he's ever seen. Here are some of the key findings in this 30-page report that were submitted to the bankruptcy court. Firstly, FTX Group did not maintain a complete list of their bank accounts. More specifically, the company did not maintain a list of bank accounts, account signatories, as well as insufficient documentation or attention to the creditworthiness of their banking partners. The company also did not perform any form of liquidity forecasting. Liquidity forecasting, said a little bit differently, is an absolutely key measure in determining how sustainable your business actually is. Additionally, the company also effectively commingled employees as well as contractors, to the point where even now it is impossible to come up with a list of all the employees and contractors who actually worked for FTX Group. The company continued to have an absolutely horrible system of internal controls. For example, when it comes to disbursements or actually cash that is paid, it was effectively done through a group chat kind of a system, i.e., a request for disbursement or expense reimbursement would be requested via chat, and then the approver would basically respond back in that chat with some type of an emoji. And it only gets worse from here. For example, corporate funds of the FTX Group were used to purchase homes and other personal items for employees as well as their advisors, and to make matters even worse, the actual record for some of those homes was put in the names of the employees. Thus far, the company has been able to locate about $740 million in cryptocurrencies. However, on the date of the actual bankruptcy filing, $372 million of unauthorized transfers occurred with respect to what was in their wallets. Additionally, when it comes to the FTT tokens, further FTTs were basically mined, effectively diluting the value of the FTT token. Needless to say, subsequent to the bankruptcy petition, a lot of the cryptocurrencies are being moved into cold storage. And it's not just that. Apparently, FTX not only made investments in cryptocurrencies, they made investments in asset classes beyond cryptocurrencies. And the sad part is they maintain no records of it, so it's impossible to identify what those investments actually were. And record keeping in general for the company was absolutely atrocious because they utilized platforms where the messages would be automatically deleted. And this was something that was actually encouraged by Sam Bankman-Fried and is likely a pure play indicator of fraud. These comments, if hold true, and there's no reason to believe that they would not, is an absolute scar to FTX, the potential likelihood of fraud, and to the crypto industry in general. Also, the damage to their accounting firm is going to be quite significant.